If you're just sitting there and you're just kind of confused about the whole process in getting a business loan, especially in this economy, this kind of crazy economy, here are the steps I want you to follow if you are looking for getting approved for a business loan real fast. Okay. The first thing I want you to do here is to learn what lenders are looking for. See, the thing is that you're not actually going to get a business loan if you have no idea what lenders are looking for. If there is a delta, if there is a variance between what you think, your expectations, and the lender's expectations, you're never going to get the business loan you need, right? And especially if you are looking for a massive business loan, then you really have to be very careful here. So a lot of lenders, they don't look for a lot of things though. I mean, number one, they ask for proof that you will be able to repay them. So son, daughter, the thing what I'm trying to say here is that uncle, and I'm talking to you. Let's say you want to have a business loan, but you are just focused on your own interest. Have you thought about the lender's interest? Have you thought about giving them proof that you can actually repay the loan? Talk to me about that. Don't talk to me about, yeah, I need 100,000. I need $250,000 because I need to scale my business. Yeah, but do you have the ability? Can you prove that you will be in a position to repay the loan? Let's talk about that, boss. So lenders want to actually, when we talk about what lenders are looking for, they're looking for time in business. They're looking for personal credit scores. They're looking for business credit scores. They're looking for cash flow. In some cases, when we talk about non-collateral, we talk about secure business loan, lenders are looking for collateral. So the value of the collateral, the industry you're in. I mean, basically, if you are in a quote unquote controversial industry, such as adults, versus you are in a family friendly industry, such as entertainment, such as amusement parks. If you are a manager of an amusement park, you see the risk is different, right? I mean, there are some industries that are not even fundable. I mean, because a lot of lenders are trying to cover their ass, so they're not going there. So you got to have a clear idea of what the lenders are looking for. So take the time, boss, uncle, grandpa, grandmother, take the time to learn what lenders are looking for. This will help you a lot get approved later on. So the second thing I want you to do here is that, by the way, welcome back to the show. I really enjoy having you here. My whole team is just loves having you here. So the first thing you do is learn what lenders are looking for, right? People talk about business loans. I mean, I'm just trying to really demystify the whole business loan thing. If you are an absolute newbie, a rookie, a starter, just follow the steps in this show. Number one, learn what lenders are looking for. Number two, decide what type of loan or financing you need. See, the whole thing is when we talk about business loans, you have a constellation, you have a catalog, you have a variety of business loans. And sometimes it's really important to have a clear idea of the loan that you need. Don't just say, I need money. You need money for what, boss? Son, daughter, talk to me. Talk to me. You need money for what? You need money. I need money for inventory. Okay, now we're talking. I need money for equipment. Now we're talking. I need to finance my accounts receivable. Now we're talking. See, the end goal of the loan that you are looking for will determine the type of loan that you are going to get. This is why when we talk about business loans, business loan typology is really important, because when we talk about business loans, you have SBA loans. Okay, you have traditional loans that everybody knows. We know this as installment business loans. You have micro loans. Those are tiny ass loans that, like 50,000, that's the maximum. And those are usually provided by nonprofit lenders such as Kickstart or Kickstart. And there's another one. I'm blanking on that right now, but they're not really, and Action. So you have Kickstart and you have Action. And so besides traditional bank loans, you have credit union loans. You also have lines of credit. You have online loans. You have business cash advances. You have cash flow loans. You have vendor financing, right? You have the Net 30 account, the Net 45 account. So you have accounts receivable financing. You have accounts receivable factoring. The point I'm trying to make here, boss, the point I'm trying to make here is that I want you to sit your ass down and know exactly what type of loan you need. Don't think that, yeah, I need this kind of loan because no. Take your time to look for the specifics of the loan you want to get yourself into. The third thing I want you to do here is that I want you to really before I even talk about the third thing, I want to really quickly talk about online loans. And I want to talk about lines of credit. Those are important elements. By the way, boss, I want to remind you of today's topic. We're having a conversation about how to get approved for a business loan. And I'm talking specifically for absolute newbies. You don't need to have a PhD in accounting or financial reporting. No, none of that. If you are a rookie, you have no idea what I'm talking about. I'm just breaking it down for you, giving you very simple steps that you need to follow. Okay. Number one, learn what lenders are looking for. Number two, decide what type of loan or financing you need. So I spoke to you about traditional bank loans, traditional credit union loans. I spoke to you about small business administration loan, the US SBA loans, the micro loans. Now I want to quickly talk to you about the online loans. It's very important to understand that online loans may be better for you if you are a startup, because traditional lenders such as credit unions and banks, sometimes they're a little skittish. They're kind of scared. They're trying to cover their asses, and they're not interested in dealing with the newbies, the new kids on the blocks, so to speak. So online lenders, they are a different type of animal. They love risk. Of course, they will charge you. They'll charge you for it though. They'll charge you a high APR. Listen, it is what it is. Okay, if you are seen as a high risk, you are a startup, or you have no revenue, or you have losses, expect to pay a high APR. It is part of the game. It is a game, right? So when you talk about online loans, you can actually get 25,000 all the way to $500,000. So this is kind of cool. So at least you have a ray of hope there. Okay, nobody's going to disapprove you, to decline you over and over and over. You can also think about lines of credits. Okay, so instead of a traditional business loans, you can think about a line of credit that allows you to actually get the cash that you need. You can also think about a business cash advance. So a business cash advance is actually financing that is based upon monthly or annual revenue and can range from $5,000 to $500,000 or more, depending on your financials. Okay, this is really important. I want to quickly talk to you also about the cash flow loans. The thing is, I just realized that it's important that I spend some time on the different types of loans, so you know exactly what I'm talking about here. So besides business cash advances, you also have something called cash flow loans, and so as the name implies, those loans are based on cash flow. See, the cool thing here is that it doesn't matter if you have bad credit, poor credit, fair credit, whatever. You could be approved for cash flow loans because those loans are looking at your liquidity trends. They're looking at your company's liquidity trends. In other words, your cash inflows and cash outflows. And some of those cash flow lenders, they don't even ask you for any documentation. Like, those are the pure no doc lenders. They'll just pay attention to your bank statements. They'll pay attention to your accounting software. For example, they'll ask you to maybe to connect your bank account, your business bank account, to their system, so they can monitor your inflows and outflows in real time. Okay, and so this is really important to understand. And one thing I want to say here is that cash flow loans, sometimes they will actually do a soft credit check, which is great. And one thing I should say here, in general, you want to actually you want to prioritize a soft credit check, because you need to actually be in a position where you are constantly preserving or at least attempting to preserve your credit score. Okay. And because the thing is, if you are a new business, a lot of time, unless you apply for an EIN loan or a line of credit, lenders will check your personal credit. They will check your personal FICO score. Okay. So this is important. And hey, listen, I know this show is about business loans, but in some cases, it might be a better opportunity to search for a business credit card. Okay, like the revolving nature of that credit card could be maybe better for you. And the cool thing here is that business credit cards, sometimes they provide instant money, like instant availability of cash. You can pay a supplier. You can furnish your office for example, right? I mean, so the immediacy, the fact that it's instantaneous, this could be alluring, it could be captivating to some business owners. Maybe you, who knows, right? So the third thing I want you to do, boss, are you still with me here? Okay, let me quickly remind you of today's topic. I'm talking to you today about how to get approved for a business loan. So I'm just giving you a simple guide if you are an absolute newbie. Okay, so the third thing I want you to do here is to find out how to get approved. Now you could be like, oh yeah, blah, blah, blah. I don't know. Listen, there are several ways to apply for a business loan. Okay, but going back to what I said originally, everything depends on the type of loan, right? The loan typology. Because some loans are easier, quote unquote, easier to get approved for than others. I mean, in this economy, if you think about equipment financing is a lot easier to get approved for because the lender knows that the loan is collateralized by the piece of equipment, by the machinery you are buying, by the machinery you are using the funds to purchase, right? Okay. Unlike this, if you have a traditional loan, sometimes the lender needs to check here and there to make sure they have to do their due diligence to make sure that you are legit to start with, that your business is legit. You know, the funny thing is that some people think they have a business, but when you start digging, you realize they have a shell of a business. And the funny thing is, it's really, really, really more frequent than you would think. That, you know, for example, you're telling me, hey, listen, I have a business, but when was the last time you received something called certificate of good standing from state authorities? If you don't file your annual report, your annual reports with the state, they're not going to issue a certificate of good standing with you, to you. And if you don't have that certificate, you will never be able to, because a lot of lenders, if not all lenders, they require that certificate to make sure that your business is legit and in compliance with state regulations. Okay, so this is really important. So find out how to get approved. And the fourth thing I want you to do is to gather documents. So things like your bank account statements, your business bank account statements, your tax returns, right? Supporting IRS documentation, any applicable licenses and registrations, for example, other financial documents, right? Credit card sales, unpaid invoices, accounts receivable due to you or others, any legal contracts that will be relevant. For example, if you are having a franchise, like incorporation, a leasing contract, those are really important elements. The next thing I want you to do, son, daughter, grandpa, grandmother, mom, dad, if you are listening to me right now and you are trying to really get a business loan, the easy way, like nothing complicated. It doesn't depend on the economy here. Okay, we're not speaking about yet. Are we in a boom or are we in a bust? Whatever. It doesn't really matter. Doesn't matter if what CNN is saying, what Fox News are saying. It doesn't matter what Bloomberg is saying, for that matter. What matters is that you have to follow a formula for success. You have to follow a routine that has proven to be always satisfactory to the lenders. So step number 5, I want you to choose a lender. Now, choosing a lender has to deal with the loan type that you have chosen, right? Because, I mean, there is a strong correlation between the lender and the loan type. Obviously, this is just pure logic. So when we talk about lenders, you have a constellation of lenders. So you have traditional lenders. So here I'm speaking about banks. I'm speaking about credit unions. So those are your traditional lenders. Sometimes they're called direct lenders. Okay. So direct lenders are lenders like they were giving you the cash right away. So they are actually financing the transaction to you. So those are direct lenders. You have lending marketplaces. So there are platforms out there, and their job is just to bring borrowers and lenders together. And what they do is they earn a commission on each transaction that a lender is able to close. That's how they actually make money. So you have Lendio, you have National Business Capital, so NBC. Those are players that actually have become adept at bringing together lenders and borrowers. Okay. You also have P2P, so peer-to-peer platforms, and those are places where you can just go and get your cash. Okay. And this is especially great for folks who don't have stellar credit. If you're a business owner, you need some kind of funding, and you have less than stellar credit. A P2P platform is really great. Could be a great opportunity to look into. Okay. So boss, what I'm trying to say here is that choosing the right lender is important. What we usually say is here, you have to think about your industry. You have to ask yourself, where are my competitors borrowing from? Like, which institution are they actually getting their cash from? Because chances are that institution could prove to be very friendly to companies in your industry, right? So this is where I'm asking you to do some kind of due diligence, so you know exactly what's happening and you're not like caught off guard by what's happening in your industry. So the last thing I want you to do here is to fill out the application. So, and this is an interesting part that a lot of entrepreneurs don't really understand. You know, ideally, what you want to do is you always want to apply at a branch if you're applying at a credit union or a traditional bank, or you want to apply over the phone if you are applying with an online lender. You always want to apply over the phone. Why? Because a lot of them, they'll tell you, hey, listen, just go on the website. We have a one-page application. Just answer the questions. What a blah 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 blah. You know why they're doing this? Because that online application is actually a filtering device. It is actually a filtering mechanism. And what you want to do here is that if you make mistakes during the application process, your file will be tossed away. This is why you want to pick up the phone and call the online lender. And you want them to walk you through, you want an advisor of that company, of that lender, to walk you through the application process and help you answer the questions. That way you are really sure that whatever you submit is actually correct, is actually, it is a true representation of what your business is all about. And so you apply the same strategy with a bank or a credit union. That's why you want to apply at a branch, because those banks and credit unions, they have brick and mortar branches. Okay, so it's always great if you can to go to a branch, speak to someone, and like actually sit down, take 30 minutes, take 1 hour. I mean, you know, I know you're busy, everybody's busy, but sometimes you have to make the effort to get the loan, to get the business loan, the business line of credit that you need, right? So go to a branch and actually talk to someone there. Okay, and so the thing here is that ask all questions. Always ask all questions. Anything that is unclear to you, ask. And when we talk about banks again, if you're lucky, you can go to a national bank such as Chase, Bank of America, Wells Fargo, or you can go to a regional bank such as a PNC, US Bank, TD Ameritrade. I mean, not Ameritrade, TD Bank, Fifth Third, BMO Harris. Or you can go to a local bank, for example, or a state bank. Okay, and same thing for credit unions. You can go to a national credit union such as a PenFed or Navy Fed. PenFed does not provide business loans though, but you can go to Navy Fed. You can go to CCU. You can go to Connexus, or you can go to a local credit union such as BECU, such as a Blue Fed. Okay, so yes. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about how to get approved for a business loan if you are an absolute newbie. So just kind of recap here. You want to learn what lenders are looking for. You want to decide what type of loan or financing that you need. Find out how to get approved. And ideally, you want to look for a pre-approval. This is really important. Gather the documents. Choose a lender that actually fits your specific type of loan and fill out the application. Thank you so much. God bless you. I will see you next time. But until then, remember, stay Marvelous.